Hello, and welcome to another update video about gold. So yeah, looking at the chart, the triangle broke out into the expected direction. I think everybody had a heads up that at least we were expecting a move down from here. This was I would say, fairly clear triangle. We saw higher lows, lower highs. We currently still count this as a 1-2 setup. There is nothing here that would suggest we have to change our wave count at the moment or the expectation. In this video, we're going to take a look at the relevant target here to the downside. But yeah, the move down was basically not a surprise. And I think it's good to see that, because without such a move to the downside, the overall correction will not finish. Okay. Now, at the moment, obviously, this move down is very rapid. We'll see where it will take us. We are going to talk about the relevant levels here on this chart. And yeah, let's dive into this. So we had a wave 1 to the upside. That's the current expectation into the May 23 highs. Then an A wave to the downside. This B wave, we've been talking about that now for weeks. Yeah. And first of all, we thought, okay, do we maybe come a little bit higher in a more extended ABC structure? But again, resistance was here all the way up to 2047. And the idea was the correction was not finished yet, and that we would come down one way or the other deeper into the support area, especially as long as 2047 isn't broken to the upside. In the last video then, or actually the last videos, we were then looking at this triangle structure here and identified it, yeah, as a potential triangle. And a triangle is a 5-wave move, which we counted here, A, B, C, D, E. The ABCDE triangle is basically forming the B wave. Yeah? So such a correction in a wave 2, which is a corrective wave. Such a corrective wave consists of 3 waves, ABC. Typically, gold likes to do ABC structures. Bitcoin, for example, rather likes to do WXY and ABCs, but definitely likes the WXY structures. And yeah, it's breaking down. And the expectation is typically that the triangle breaks to the opposite side of the E wave. And yeah, the wave count is still the same one that we discussed in the last video. Now, what can we do? How can we measure a target? Obviously, I gave you the next support target to the downside was 1853. That was broken now, so we have to expect to go to the next one. Definitely either way, you know, even if we are more bearish. I mean, at the moment, I'm purely tracking this as bullish because we had a really nice 5-wave rally to the upside. The move down was corrective. Yeah, the triangle fits very well into a corrective ABC structure. And therefore, I'm tracking an overall bullish scenario. But I would be very careful generally. You know, in a downtrend, I want to see a first impulsive reaction to one of these fib levels. So the next one is 1798 and then 1719. Below 1719, things are going to get much more difficult for the bulls. And we might head into a more bearish overall scenario. But at the moment, there are a few ways how we can calculate a target for wave C. So first of all, we need to understand that in this pullback, or in this breakdown, the next support is at 1798 and then 1719. This is Fibonacci support. And then we can add to that the relevant targets for the C wave. Here we have the 1-to-1 ratio as the next very prominent target level at 1786, very close to the golden ratio, the 1798 level. So I would pay attention to this range here between 1786 and 1798. But yeah, if we don't even see a reaction there, then of course we might have to focus on something more bearish. But actually, I mean, looking at this, in my opinion, we have 5 waves nearly complete. I mean, the C wave is a 5-wave move, okay? And at least I can count 5 waves. Now, that doesn't mean it has to turn around, but it means the wave count is technically full and it doesn't need to come down any lower. But it can, of course, it can always extend, right? But this looks like it's nearly finished. So I would say that we need to start to focus on potential turning points here. But there is at the moment 0 evidence that it's stopping. So there is going to be some structural support down here as well at around 1810. So pay attention to that level as well. And yeah, I mean, showed you the Fibonacci extensions. I showed you the Fibonacci retracements. Below 1719, an overall bullish scenario will get challenged. But see, if this is an ABC structure, it would fit very well because If this was something more bearish, then probably this move down would have to be a wave 1. This would have to be a wave 2, and then, I don't know, this would have to be a 1-2, 1-2 setup. It just looks more like a triangle, and triangles, a wave 2 cannot be a triangle, only a B wave in this case. So anyway, you know, we keep the options open anyway, that the trend is down at the moment, so we focus on further downside, but we are tracking an overall bullish support range to understand where the price could turn around. And we want to be rather bullish on the metals market. At least I am. I like to be, because I know how quickly those rallies can happen. See here, when gold is turning around, and I'd rather be a little bit too bullish too early, instead of missing this move. Okay. But yeah, at the moment, there is no sign that a low is in place. So we continue to focus on lower than next targets were mentioned. So hope you like the update. We, by the way, now launched our stocks and shares service. So a lot of you asked for it. So we pushed and pushed and pushed and got it launched now. Feel free to check it out if you like to. You find a link in the video description. It takes you to Patreon. This has to be done on Patreon at the moment. We plan to do that on the website at some point, but we're not there yet. So feel free to check it out. You can read through it. Link in the video description. It's for stocks and shares. We update 20 stocks and shares throughout the week, and then S&P 500 every day. Gold, silver is not included. We'll see how we do that in the future, but at the moment it's just stocks and shares and the S&P 500. It needs to be manageable for us. Yeah, we don't want to stretch ourselves too thin. So yeah, that's my update about gold. I hope you liked the update. If you did, then please hit the like button, leave a comment and subscribe. Have a great day. Bye-bye.